Well, 2024 is going to be a huge year for real estate and real estate investing. Hey everyone, I'm Clayton Morris. Welcome into the big show. Today is our Q&A episode where you're going to be able to leave your voicemail questions. We will answer a few of your questions here on the show. Hope you guys had a wonderful holiday season. It is the new year. It is a new time to start thinking about investing. And I wanted to kind of kick today's show off by talking about the predictions for real estate in 2024. You know, if you look at the National Association of Realtors and you look at their data from 2023, November 2023, we saw up 4%. So we don't have the December numbers just yet because we're right at the turn of the year, and they don't get those numbers out yet. But we're up 4% in home prices in November of 2023. I just want you to think about that for a second. Home prices up in November of 2023 around Thanksgiving time when interest rates were really peaking out, getting very, very high, right? And started to come down just a little bit. But we still saw home prices up 4%. Now, my prediction, of course, for 2024 is that we are going to see an explosion of, well, first of all, the demand is off the charts, but we are going to see an explosion of bidding wars and pent up, it's like all these people that have been sitting back like a bottle of soda that's been shaken up, waiting to move, to sell the house, to buy a house. All of that is going to come to a head here. And I believe by April, May timeframe, you're going to see an explosion in the real estate market, which, to me means prices are going to go up. You're going to see an explosion of prices over the spring and into the summer. So again, as an investor, that's why I'm buying right now, because even at the end of the year and at the beginning of 2024, because I really want to be able to lock in some of those prices before they go up. So I believe as we look at these numbers, again, this was a 4% increase. The average median home sale price in November was $387,000. That's amazing. So what is going to happen in 2024? I mean, it's anyone's guess, right? There could be major shifts. There could be all sorts of supply chain issues as it relates to the Suez Canal and what happens in the Middle East, of course, what happens there. But overall, right now, the nation has a 3.5 month supply of housing inventory as of November, which is low enough to basically be considered a seller's market. That is in November. It's a seller's market in November. And then you hit the holiday, and then people aren't selling during the holidays. Just imagine what's about to happen in April and May. Again, I'm predicting it here. We will watch it very, very closely, but I'm predicting a crazy spring for the real estate market. Prices going up across the board. Interest rates continuing to come down. So anyway, it's going to be a great, great year for real estate investors. I'm very excited, although I'd want to lock in some of those prices before they go up. That's definitely how I feel about it. Anyway, I hope you guys had a wonderful Christmas. We got 3 questions we're going to take here from our viewers today. And yes, I've got a little bit of the Christmas beard growing right now. If you're listening to the audio version, it's like during the holidays when I kind of shut everything down for a little while and just spend time with the family and, relax, read books, play video games, and just act like a total bum for a few days. It feels good to just be a bum for a couple of days, But also part of that is I hate shaving. So I've got a little beard going on. And now I definitely see the gray in my Santa beard right now. All right, let's get into some questions here. But first, I want to tell you about our friends at Lear Capital, because Natalie and I are big investors in precious metals. Yes, we invest in real estate, but a big portion of our portfolio are in precious metals, gold and silver, because of what's happening to the US dollar. It's no secret, if you're tuned in, then you need to know that experts are predicting a big recession headed our way. One economist just said, this is the beginning of the end for the US dollar. So if your savings accounts are tied to the US dollar, look out, folks. Please, please protect yourselves. And we are devaluing the US dollar faster than ever before. And last year was terrible for most investors, but 2023, 2024 could even be worse unless you're smart and you have a portion of your assets in precious metals, other hard assets like gold, silver, and real estate. And that way you can protect your financial future as these other investments start to collapse all around other people. So if you want to invest in gold, our friends at Lear Capital can get you set up and start purchasing precious metals right now, or even converting part of your IRA or your 401k into a gold and silver IRA. It's very, very simple to do. And you can call them. They love talking to people on the phone, so you can see if it's a fit for you. Give them a call today at 1-800-450 1008. There's the number on your screen. We've also set up a special website just for you as well. You can get your free gold and silver investor guide by going to learmorris.com. That's LEARMORRIS.com. And right now, if you call and work with them, they'll get you set up with $15,000 in free bonus metals. That's right, $15,000 in free bonus metals with a qualified purchase. Again, call their 800 number today, 1-800-450-1008. And you can buy gold bars, gold coins sent right to your home, silver coins, silver bars sent right to your home, or held in storage off-site. They will talk you through that entire process. Again, give them a call today, 1-800-450-1008. Our first question is from Victor. Oh, by the way, I should mention, if you want to leave us a voicemail question, you can go over to our website, go to morrisinvest.com, click on the microphone icon that's on the right side of the screen there, and then just leave us a 30-second voicemail question. All right, Victor, take it away.
Hello, Clayton. My name is Victor. I am from California. I have recently acquired some equity in my home, and I am wondering what safe parameters you think would be regarding getting a HELOC, what percentages, what to avoid, and if it is worth it going that route in order to invest into a rental property. I know you have mentioned that it is a good idea, but I would like to hear your opinion on how much of that equity we should tap into.
All right, thanks, Victor. Thanks for the great question. So you're sitting on a bunch of equity in your California home, and you're wondering, okay, let's just hypothetically say you've got $200,000 worth of equity in this California home, okay? And what do you want to use of that $200,000 to buy rental properties? You absolutely do not want to invest in California, right? California is the worst state in the country to invest in real estate. It is not a landlord-friendly state. In fact, it's arguably the least friendly landlord state in the country, as you know, being a Californian. So what can you do with that $200,000? Well, personally, and again, I can't give you financial advice and tell you to go and do this with whatever, you do you, I will do me. But if I had $200,000 in equity in my California home, I would get a home equity line of credit versus a cash out refinance. Okay. Now you've probably watched my videos where I've explained the differences between a HELOC and a cash out refinance. The cash out refinance is I'm getting a whole new mortgage, right, with closing costs. And then, of course, those closing costs, it's a brand new mortgage. So you're paying thousands of dollars to get a new mortgage. And yes, you're getting a lump sum payment from the bank in this transaction. But now you've got a new interest rate, and you're starting the clock over again on your 30-year amortization schedule. So I am not a fan of the cash out refinance. Now, there's certain situations maybe where it would be okay, but I am not, okay? The second choice for me is the home equity line of credit, the HELOC. And there you're getting a credit. You're basically like getting a credit card, and if you want to look at it that way, with a zero balance. You're starting with a zero balance. And then from there you can do whatever you want with it. But you're not you get a zero balance when you start out. You're not $200,000 now in the hole. So now you've got this 10 to 15 year revolving sort of like line of credit that the bank is giving you. And it's up to you now. What do you want to do with it? Do you want to take 100 of it right now? Use 100 to buy a rental property or 2 rental properties? I like to think of our properties at Morris Invest, like the down payment amount is about $50,000 to $60,000 for a brand new construction property. So when I see, like, in my brain, when I'm thinking $200,000 in equity, that would get me like 4 rental properties, basically. I could buy 4 rental properties, and then, you'd have financing for the rest of it, right? But those would provide the down payments for you to buy 4 properties. Again, we're using a hypothetical number here. I have no idea what your equity position is. But you don't have to my point is, you don't have to use it all at once. If the bank is telling you have $200,000 worth of equity that we're willing to lend on, they're going to give you 80% loan to value ratio anyway, right? So you're going to get a percentage of that, 80% of that 200,000. And then why not max it out? Again, you're starting with a zero balance. So it's not like you're now in the hole. You can use however much of it you want. So if I had $200,000 in equity, I would take the maximum amount that they would give me. That's my long-winded way of saying it. But if the bank's going to extend that line of credit to me, then I can use it however I want. I could use 50 and buy one property, right? Get that up and running. Then I could pay that 50 back, buy the second one, or I could buy 4 all at once. So again, totally up to you. But personally, I like the idea of maxing it out, and I would use a home equity line of credit versus a cash out refinance. I hope that helps. And by the way, I should mention, I've mentioned this in multiple videos, you need to shop around. There are banks out there that will do home equity lines of credit. I know it seems like it might be hard to find these days, but they absolutely are out there. You just have to shop around, get on the phone, make a phone call. I would call my friend Dan Kraus down at Churchill Mortgage. Great guy. He can point you in the right direction. He might be able to line you up with a home equity line of credit there in California. Great team over there. And they've been fantastic. I love working with their team, and Dan has been amazing. So I would start there. Again, we're not affiliated with Dan in any way other than we're friends, and I love his business. He's a great guy. Okay, next question here from Kevin.
Hi, I'm looking to start investing in USA real estate from Canada, and my Canadian tax accountant has no idea what entity or type of entity I should set up to keep my taxes low, what type of LLC or corporation I should do, or if I should do that at all, to keep my taxes lower and not be double taxed. So if you could just help me with that basic information, that'd be great. And then in 2024, I'm looking forward to start actually investing in real estate, and you guys are at the top of my list to actually have helped me do that.
Hey, thanks so much, Kevin. I appreciate that. And yes, we can help you. So, Kevin, you can talk with our team. Our team will walk you through that process at Morris Invest if you're interested. We've helped a number of Canadians do it. You just have to jump through a few extra hoops and hurdles. Among those, you have to make sure you get a tax ID, of course, set up in the United States. So this is important. You have to get a tax ID number set up in the United States. You also must set up a U.S. bank account, and you have to follow U.S. tax laws, okay? So it may require you to reach out to a U.S.-based tax company to speak with them, because if your tax accountant there in Canada is not familiar with the type of entity structure, and I know there's some differences as it relates to LLC structures in Canada, where you would place it. Probably you would be setting up an LLC in the United States, and that's where you would hold that real estate. Now, the beauty of this is that there's a tax treaty. The United States and Canada have a tax treaty, so you won't, without double taxation. So that tax treaty is structured in such a way that will protect you from being double taxed, right? And if you get that foreign tax credit, then Canada sees that, oh, you've already paid taxes. Well, we're not going to double tax you for it. But yeah, you're going to want to get the tax ID set up. And I would definitely just talk with our team about the structure in the United States and whether or not you want an LLC set up in the United States. And then, of course, the business account that you're setting up, the business checking account where your rent would flow into. Right. So if you're paying then U.S. taxes, then of course with your Canadian taxes, you would then file that as a foreign tax credit, and then you wouldn't be double taxed in Canada. Okay, that's been my experience doing it when we did it in Europe and all of that. So again, it has the same tax treaty in Canada as the United States, as Europe does. So hopefully you found that helpful, Kevin. But again, talk with our team, because then they can find out specifically what your unique situation is, and then also point you in the right direction as far as a tax team in the U.S. that help you set up an LLC structure or a business structure. All right, next question.
How much does it cost to set up a self-directed IRA?
Okay, great question. Thank you so much, Joe, for that question. Well, it depends on the company that you're using. Now, most of the custodians are only a few $100s. I think Natalie and I pay, I think it's like $200 or $300 to set up the custodial fees, and it's and that's for one asset. Then you like $300 for a second asset or something like that. So it's very minimal. It's just a few $100s, and then it's sort of an annual just sort of maintenance fee on the account. It's very, very cheap. There are some though that it depends on your structures, and there's some SDIRA custodians that will go up to like $2,000, $3,000. I've never had that experience personally. I just know that they're out there. I just want to warn you, depending on which custodian you choose. But it's very minimal. It's like a few $100s. But I wanted you to compare that to like the 401k or these other retirement accounts that have thousands of dollars in fees that are hidden and you don't even know about. It's the beauty of the self-directed account, just a few $100s to get set up. And by the way, our team can help you get an SDIRA set up in like about 10 minutes. So if you're interested in that, Joe, just book a call with our team over at Morris Invest, and we'll help you get set up with an SD IRA in a few minutes. Really, it's literally under 10 minutes. So go to our website, go to morrisinvest.com, click on that microphone icon that's there on the side of your screen, leave us a voicemail question, and we will attempt to answer those questions here for you on this show. We'll be back next week as January kicks into high gear. I'm very excited about 2024. It's going to be a very interesting year. I mean, we're going to see interest rates going down. We're in an election year, of course, so it's going to be wild in the United States. We have a pent-up demand for housing right now, an absolute, massive demand. So it's going to be a very interesting year to watch out. So happy New Year to all of you guys. We'll be back here next week for another Q&A episode. Until then, go out there, take action, become a real estate investor. I believe it's the number one way to build wealth. We'll see you next time.